Welcome to the Daily Brief, where I'll quickly go over the highlights in the market for Wednesday, August 24th, and then see how things look for Thursday, August 25th. And yet again, I'll just be doing a daily brief because there hasn't been much change, a little bit here and there that I'll point out, but the markets are really on hold right now. There's great anticipation for Friday's session when Fed Chair Powell is going to be making a speech at the meeting that they're having in Wyoming. And so they're wondering, is the Fed going to pivot? Are they going to continue with this more hawkish stance of being really concerned about inflation? And plus, it's still August, and a lot of people are either finishing up their vacations or on vacation. And so it tends to be a slower time of year right now. And so we're seeing volume still quite low on an average basis and not a lot of real decisiveness right now. So let's go back and talk about some things that happened. We ended up being up 0.29%. So it's the first positive day that we've seen in a few days, not a gangbuster up day, but still it showed some improvement, but our volume is still below average. And the technicals, we're seeing a little bit of an improvement with the short term because of the up day, and it had already worked itself kind of into a short term oversold condition, where the intermediate term, it's still turning more negative. It's going to take some more upward movement for that to improve, but we're really seeing kind of an across the board mix right now because the markets are all concerned about inflation and interest rates, the geopolitical concerns, the situation that I pointed out earlier this week with the car bomb in Russia that attempted to take out an influential person, and the daughter ended up being killed instead. I haven't really heard a lot more about that. Doesn't mean there's nothing happening, but it's certainly not front page. It kind of quickly went through the news cycle, but we still want to keep an eye on that because Russia tends to think it's Ukraine. And if Ukraine is really behind this, then that kind of can draw the US into this situation even more than the US is already involved, where other things are saying, no, this might have been an inside job within Russia itself. So, and getting any kind of useful information from that is rather challenging, to say the least. So that's kind of where that's at right now. We want to just be aware of it, but it's not really having a big impact, at least yet or right now. We do have a lot of earnings reports that are still coming out that can influence things. And then the whole Russian, and I said Russian yesterday, I mean recession debate that's going back and forth, whether that's going to clear up at all, because we have the second report for GDP coming out on Thursday. So that could give some more direction to this whole recession scenario. So, what are some comments? We had another calm day, and it was a pretty narrow range. If we're seeing a lot of movement over the last few days, it's usually coming in the overnight session, and then we gap. Lately, it's been a gap lower, but then as the day goes on, we're not seeing a real wild ride between the high and the low. So that's pretty much what we saw, and it's not really helping our charts all that much, but it's not really turning them much more negative either, except what I've already stated. There's this great anticipation against the speech that is supposed to happen on Friday. The markets will just be watching that and hanging on every syllable to try to see if they can get some kind of insight for things. So we saw a little bit of an improvement with our sector rotation because of the up day. The positive setups bounced a little bit, but we're still kind of keeping them off to the side right now until we see more follow through with price action. And we still have the 10 to the 2 year and the 10 to the 5 year. They're still inverted. The 10 year to the 3 month, it's close to being inverted as it has been for quite a while now, but it still has not gone inverted, at least yet. And then we're seeing more of a strong inverse correlation between interest rates and stocks. So if interest rates are going up, stocks are going down. That's becoming a lot stronger of a relationship. And then if stocks are going up, interest rates may go down too. So, and we're seeing a little bit more strength with the stocks to the dollar correlation, but it's not real strong, at least yet. Fear and greed still are right about at neutral. We could go either way on a sentiment basis based on the fear and greed index that we use. We had the weekly MBA mortgage applications index. It came out at minus 1.2% for the week, where the previous week it was down 2.3%. So we're still seeing some continual weakness within the real estate sector. Durable goods came out and they were unchanged, where they actually expected it to be up 0.6%. If you take out transportation, it was up 0.3%, a little stronger than expected, where they had thought it was going to come out at being up 0.1%. Pending home sales and other real estate area, they were down 1%, but not as bad as what they had expected. They expected it to be down 3%. Our trend is still positive. The ADX is above 20. It's still, the green line is still on top, even though it turned up, the green line turned up a little bit, but it is a weakening trend. The ADX is really starting to fall and it's below the moving average. The bias, I've switched more now to mixed, because we were up as much in Wednesday's session almost as we were down in Tuesday's session. So there's real indecisiveness right now as far as our day in and day out bias, where I'm still keeping our momentum negative because we went up to that 200-day moving average. We've been falling back ever since, and we're not really showing a significant bounce, at least yet, to get that more back to a positive momentum basis. So what's our outlook then? The technicals, we did see some improvement in the short term. Of course, a lot of those indicators were already shot down to extreme negative, and they're starting to bounce back up a little bit, where our intermediate term is still looking weaker. We're pretty much all of our oscillators now have switched over negative with the MACD, the PMO, all the list of oscillators that we use. If they haven't switched over negative yet, they're getting really close to actually crossing over negative. Sentiment still continues to be neutral. We have the second quarter GDP estimate coming out, which it was the first one that really sent the waves through the stock market. We'll see if this one comes in at about the same. It might not have as much of an impact, or if it's wildly different one way or the other, it could have an impact on things. And then every week we get the jobless claims that come out. Of course, the whole list of geopolitical events. With, I talked about the Russia thing just for a moment, but the markets still are just really fixated on what the Fed is doing. And that's pretty much what's controlling the sentiment and how people are feeling about things right now. So our scenarios, we're still kind of in a down scenario, especially more intermediate term, because of all of the different reasons we've been talking about. I'm saying that the technicals are mixed, because short term we're showing a little improvement. Intermediate term, we're still turning more negative. And so our setups that we're looking at, we're just kind of keeping those in the background for right now, realizing that they're there, they're still valid, and they still have produced good results in the past when these setups have happened. We're just not seeing a lot of follow through with price right now. And then we're still kind of up also because the technicals are mixed, showing a bit of an improvement on the short term. Our scenarios, again, we're just kind of waiting to see how things play out over the next day or two. And we're still below the 200-day moving average, but now we're back to playing around with the 20 period moving average, and that's the fastest one. We're still above the 50 and the 100, so those are still below current prices and might end up offering some kind of support. But the 20, it goes a lot faster, and we're right at about that level right now, and we're not sideways. Now, if you use the ADX and you see that trend starting to fall with the ADX declining, you might think that we're more in a sideways trend right now. But on a peer basis, we're still above 20. It's still a positive trend, but it is weakening right now. So our conclusion is the S&P is turning negative overall. Until we see a nice little bounce, that's kind of the overall scenario. But we're seeing some improvement with the short term. Intermediate term is weakening still, and the long term is still negative. So thank you. I hope you find these brief videos helpful. I'll gladly do a full-blown video, but we're not seeing a big enough change to really tell us much more than what we're seeing or what I mentioned in this video. So stay tuned and we'll see how things play out in Thursday's session. And then Friday, it looks like is going to be kind of a big day. So have a great day and I'll talk to you next time.